Good morning, everyone. Week of October 13th, market preview. What is today about? Well, after the market getting smacked on Friday because of what Trump said about some escalation of tariffs with China and escalation of emotion. Some of that was walked back over the weekend, and amazingly, the AES has only made back less than half. The key in here is usually the first break, and I'll show you this in a minute. Usually there are two things. Number one, the first break, usually you try to test the high later. I'll show you an example in like Hood, and I'll show you what I mean by these big red candles. But it could symbol a change in direction. I'll go over that as well. The first thing I wanted to go over is the lack of government reports. See this CPI? That's out because of the government shutdown. So a lot of the reports are going to be shut down, but you have a lot of speakers. Keep in mind the Fed speakers, there's a blackout period next week prior to the FOMC meeting. So this is the only week they're going to talk and they don't have a lot to go on. So they're probably not going to say much. So the only thing in here is the beige book, which you get on Wednesday, and everything else you just gotta, it's going to be delayed. So markets hate uncertainty. Keep that in mind. The other thing, most anticipated earnings, and what you're going to notice in here is you have the banks tomorrow morning. Now, you know I like to fade things if they open up. Betting that traders flatten by the end of the day doesn't work as well with banks. It just in the history of watching this. Domino's, maybe. So then you have the Dollar Tree, you have that on Wednesday. You have Schwab, which is a big one on Thursday morning, and American Express on Friday. Those are big ones to me, and there are a lot of other ones. This is just from the most anticipated earnings whispers, but there are a lot. And what I'll show you is I have seen that there's a lot of insider information these days prior to events. I'll show you what we're talking about. Just go in and you could see, and I posted this when it happened with UAL prior to Delta's earnings. So prior to Delta's earnings, you got this. This is ridiculous. I'm showing you right now is UAL, and I'd go on unusual option activity. You're going to see in here that UAL had 18,000 calls. Now, this is during the day. It got up to 31,000. And when I mean unusual, it's a lot of volume versus open interest, and it's a lot of volume versus the puts or vice versa. So 18,000 when nothing else is traded is a big deal. And sure enough, the stock opened up 5 points on the back of Delta's earnings. So we're going to watch unusual. But if you see 8,000, 9,000, 10,000 of all the options on the puts and calls, don't pay as much attention. The other thing, because of the Robinhood effect, because most small traders are buying calls, they don't buy puts. Unusual put activity is always more important. But still, if you see 31,000, that's a big deal. So that's one thing we'll be doing. The other thing, like I said, usually after a big sell-off, two things happen. Number one is just usually you get a bounce at support, which you got. Whether it's Trump walking back comments, whether it's just you got too oversold. So the first thing I want you to see is the daily chart on the left, and you can see the oversold condition right here. But that's the good news. The bad news is if you take the non-24-hour SPX, it's not oversold. Now, the other thing to watch, and I didn't show it on the left, but I'm going to show it now, like it for maximum effect, is you'll see that. So you're going to see that this is at the 50 moving average, that dotted, and this is at the 50. So the 50 will probably stop it right now. The other thing I want to show you is definitely what happened to Hood after the first red candlestick in a big old uptrend. So what you're going to notice in Hood, and I warned about this, you've got that red candlestick, You came back, and I'm going to link it so you can see the hourly on the right. So we're going to take the hood on the right on an hourly. This is typical action. You saw it in 2000, you saw it in 2008, you see it all the time. You get the red candlestick, which is a signal of warning. That's all. So red candlestick, signal of warning. You then come back to test it, and then you can draw a defined trend line. As you see with the hood on the right, you could definitely draw that defined trend line. They test the high. A lot of times when the stock's in a big old uptrend, it tests the high. The other thing to watch, and you have to respect this, the 50 moving average, is it going to turn down? No. Is this lower than 50 days ago? Not even close. So even though you had a sell-off, that is still going to slope up. I'm really into slopes. So that's still going to slope up. Now, shorter term one, sure, that can matter. Is this lower than 20 days ago? Not even close. So I'm just telling you, there are a number of stocks that have had one day down, and one day does not make a trend. I just can't stress that enough. The other thing, I know the markets have gone straight up. You have over 400 stocks that are under their 50 moving average. So there's been a lot of money to be made on the short side. We have made money both ways, both ways. I just want to make that clear. The other thing, S&P in 1997 to 2000 had some great sell-offs. I was trading it. I made a lot of money on the downside too, even though the markets long-term were in an uptrend. How do you play that? Day trade short, swing trade long. That's what we were doing. And right now it's the same. Now, if you go back to the SPX, back to earlier in the year, and I'm telling you, I watch more people say, oh, they bought in April. Well, if you bought in April, you lost only 10%. You got to buy on the way up, even if you miss the beginning, because if you bought on the way up here, you lost 1,000 points. You buy on the way up. We care about direction, not absolute price. Here, swing trade short, maybe you could day trade long, but wait for the trend to change. And that's what we did, and we're going to continue to do that. Up here where it's choppy, yeah, day trade short worked great. Swing trade short, no. So there were individual stocks that sold off, and we're going to still look like for that. So what are we talking about? Well, we're talking about the bear flag in Capital One. So even though markets were going up, we were betting the consumer was dialing back, and sure enough, that worked great in Capital One. Did we short it up here? No. You wait for the direction change, and that's what we did. I wouldn't be surprised to see these rally up to the breakdown. So whether it's Capital One, believe it or not, Apple, rallying to the breakdown. So we're going to look today actually to do premium selling by doing put flies slightly under the market, betting that this was that one-day wonder, but the direction might be changing. If you see it in hood, where you do this and you do something slightly under the market, you did fine because the volatility is pumped this morning. So that's how we're going to try to play the banks. How do we play it? I'm telling you right now, we look for unusual option activity, but overall we react after earnings, and that's how we've made the most money. We've made money reacting before earnings. If something gets pulled up, a lot of times it flattens, not banks, but everything else. We then play after earnings because a lot of times these options are way, way out of whack. What I mean by that is something like AMD. Holy cow, the stock opened up at 240, right in this area, really 238. The 280 calls were $1.90. Holy cow, with 3 days to go. We take advantage of premium out of whack. You don't see it very often, but you see it around earnings. That's how we're going to play this week. Have a great week. Just so you know, my tenure at Simpler Trading ends on October 30th. I will be only in tradingnest.tv. Right now, just go and sign up to be on the email list. We'll have a special introductory price. Same content, even more. and very excited about it. Take care.